freedom isn't the result of wealth, it's the foundation. Welcome to Wealth Independence, where freedom leads and real wealth follows through battle-tested strategies, hard-won lessons, and real-world experience. You'll discover how to accelerate your path to true financial independence. And now your hosts, Dustin Bailey and Adam Penn.
All right, welcome back to the Wealth Independence Podcast, where freedom leads and real wealth follows. I'm Dustin Bailey, and I'm here with Adam Penn. Adam, how you doing today?
I'm doing good. I'm excited. We were just talking. I'm going to be doing a barbecue, or you said a grill later.
Yeah, you're going to be grilling out, right?
That's the California versus the East Coast, right? The tenant. I had someone else tell me this a while ago. I said, "Oh, we're having a bonfire," and someone from back east came over, and they're like, "This is just like a little fire. It's not a raging bonfire."
Yeah, when I hear bonfire, I think of like it's in the middle of a field and it's a stack that's like at least 6 feet high. Like we're not. Wait, would you call a bonfire like you gather around a fire pit or something like that? Would that be called a bonfire?
I think I used to say that. I don't know. Maybe I wouldn't anymore.
Okay.
But it also wasn't a fire pit, right? Like I just had a bunch of stuff in the yard stacked on it, but it was only like 2 feet tall.
Was this all the brush that you cleared off from your landscaping over the weekend?
Years ago. I was a college professor.
Okay. Well, I hope it goes well. It's getting to be springtime, so tis the season for that kind of stuff. Yeah, well, I'm kind of excited about our topic here today. I think you've this was one that was more of your picking, and I think you've got some thoughts on stock market turbulence.
I think it's been a topic of conversation, right? I mean, it's funny because we talk to investors all day long, and half the time it's, I don't want to say convincing, but it's talking to investors about whether or not they want to move money from the stock market to a different asset class. Yeah, no,
there's a lot of that, especially for folks that have never invested in this space before, right? Most of the investable assets tend to be in the stock market or into maybe not stocks exactly, but things that you could purchase in a brokerage account, right? They're not outside of that system.
And it has a drastically different type of liquidity, right? So I think our point here is to kind of talk about the differences. One thing I'll just mention because it was interesting. I was talking to a friend this morning that works for Morgan Stanley, and I was actually calling him because like, do you have any contacts? I'm looking for a hard money loan. So if any of our listeners want to give me a hard money loan on a property, feel free to reach out. But I was talking to him. He's like, well, when you have some more liquid assets, and he meant of having stocks of over $1 million. He's like, well, if you have a stock brokerage account of over $1 million, Morgan Stanley will loan up to 70% on it at 5% fixed for 3 years. Interest only, fully amortizing, no payments. Like he's like, all the options are there. So that was interesting.
But how they so we're given
when are they going to margin call you?
Yeah, exactly. Right. Yeah. Like that. Are they checking that daily? So if you end up with a fairly significant drawdown in one day, are they going to say, "Hey, need you to write a check"?
I don't know. I didn't go that. I don't have a 7-figure stock portfolio.
Okay.
So.
Oh, I thought you did.
No, I keep most of that in real estate. So actually, I was looking at my personal financial statement the other day, and it's like, I don't even keep the stocks on there, right? Like I've got a few $1,000s in a stock account.
I know what you mean. Like it's kind of funny to, I don't know. I obviously you and I both love real estate, right? But I don't necessarily see any problem with having most of our investable assets in real estate. I'm aware that may not be the right choice for everybody, but at the same time, like one of the things I've learned, and you mentioned talking to a lot of investors, like you and I both think that way. We are around a lot of other real estate investors. We're part of groups of other people that think that way. And it's funny that like a lot of people don't, right? Like you talk to people that aren't directly in the real estate sphere. They are only looking to have a small portion of their total investable assets in real estate. Whereas we look at it as like, well, that's like the vast majority of everything.
Well, and I look at some of the wealthiest people I know, and I've been lucky enough for some of them to share their personal financial statements with me. And when I look at, they have more zeros than I have, but their percentages are pretty similar. I've looked and been like, oh, that's like 70% here, 30% there, whatever the percentages are, but it's pretty comparable.
So there's been, I think the thing that kind of prompted this conversation, there's been some turbulence in the stock market, at least as of this recording, the last few days. I think we've seen some of the biggest drawdowns since some of the stuff I saw was, 2022, when there was, I think everybody woke up to the fact that holy crap, interest rates are going up and everything started selling off.
And that's funny because I was looking at charts this morning and everyone's like, oh, if you just got completely wiped out. And I'm like, these look like we just went back to 22 levels, right? Like this is not a 100-year storm here. I mean, it could get worse. And, we were talking about some of the implications of government cuts, and which we're both very pro the government cuts. So, I mean, just having lower jobs from the government, that will change the amount of jobs that are out there, right? And that I don't think they were worthwhile jobs or jobs that we really want to keep around, right? There's just tons of, I don't want to use the catchphrase of fraud, waste and fraud and abuse. What's the going phrase right now? But you see a lot of this, and it's not necessary. There's no example ever where government's done things better than a private sector, and I mean, you see that in roadways and everything. I'm getting off on a tangent here, but I had one friend the other day I was talking to, and she was like, "Oh, we need the government. They need to build roads." And I was like, they farm that out to civilian private companies that build the roads, right? Like even Caltrans, like most of their stuff gets farmed out to like Knife River and things like that. Yeah. And she was like, "Oh, well then why are they there?" I'm like, "That's my point.
Great
they don't
question.
need to be." Great question.
Yeah.
Just skim a little off the top.
I think it's interesting, right? Like we're definitely living in interesting times here. I think I sent you this in an email this morning, replying to something else, but this is a topic for a future episode. I generally believe that the study of macroeconomics, as what most people refer to as macro, which would be like monetary theory and stuff like that, I generally think that's a waste of time because it's really just like your politics. It's a way of framing your politics in an economic manner. Anyway, I'm still working. You can tell this is still floating around in my head. That'll be a future episode at some point in time. But one of the people who spends a lot of time talking about this stuff is George Gammon, and so we know George. We spend a lot of time with him, and I kind of give him a hard time about that. That whole space. It's like, okay, well, it's kind of, I think it's largely a waste of time, or there's not a lot of actionable things that come from it. It's more of like intellectual entertainment. But I will say one of the things that he has said for a while, when people have talked about the size of the national debt and that it keeps growing and growing and growing, and he's always said, well, it's not the size of the debt that's really the problem. It's how the debt's being used. Like we are borrowing money to do things that don't make any kind of sense. And that's been this government spending. And his point was that the debt, again, it's not the size of the debt that's the issue. It's the economic distortions that are created by how the debt's being used. And I think we're starting to see an unwinding of some of that. And of course, when you've had economic distortions, if everyone believes that things are a certain way, and now all of that starts to unravel, you start to see how things actually are, and it's maybe not as pretty. It's not as nice of a scene as you were led to believe. And I think there's several ways that, like, I mentioned this to you before we before we pressed record here, was like there was so much of the employment numbers. I saw a lot of commentary through 2024 when the monthly employment numbers would come out, and people would talk about, like 70% of the new jobs were government jobs. Well, does that really count? Like, how is that indicative of a healthy economy? And so I think that's just an example of, like, it's an economic distortion. It's propping up something that's probably not that strong. And so when that starts to go away, we're going to go through a period of turbulence here. And I think we're starting to see the beginning of that. Now, how severe that's going to be, I don't know. But I definitely think anytime you see the level of cuts that we're seeing, I mean, we're seeing government spending cuts, the likes of which people had said was impossible, right? Like this had been talked about before. Like, oh, that'll never happen, precisely because nobody wanted to take the political risk of what would happen to the economy if it's truly as bad as feared.
Yeah, if you did start cutting everything, I think this is actually a good time to pause really quickly and ask everyone, if you're enjoying the conversation we're having, take a second and share this with friends, share this with family. If you're on a website that you can leave a review. Helps make the computers think that we're worth listening to, and then they'll send it out to more people, and we'll keep doing this. So anyway, if you can, hit that like button, subscribe, things like that.
So, Adam, I'm curious, just from your point of view. I mean, I don't know. We haven't talked about this a whole lot. Obviously, there's implications for the economy as a whole. The stock market's kind of freaking out right now, and my take on that is that's just more of there's uncertainty, and anytime there's uncertainty, investors sell, right? Especially stocks, especially things that are liquid. The motto is sell first and ask questions later. What thoughts do you have on how some of this might impact? Stocks are one thing, but what about like Main Street, right? And then the space we play in with more real-based assets.
Well, it's funny, right? Because I was thinking earlier, I was like, well, we've seen this large sell-off of stocks, or sorry, I shouldn't say sell-off, but, a falling stock prices. And I'm like, well, minus a few $1,000s I have sitting in a stock account that I don't pay much attention to. It doesn't really affect my monthly P&L, right? It's all real estate prices. Market's been a little slower, but overall, I'm not seeing some massive change in my portfolio. But there is a point where, though, that type of income and other people's ability to continue to live and pay for things can start to affect rental income. And so that's kind of where I can start to have some concerns. I don't think we're at that point. I don't even think in a recession, we normally don't see massive falling prices. You probably see some more concessions around lease ups, but you don't see massive falls in rent. You didn't see that during 08. You saw small drawbacks or flatline, and it was very market dependent. So it could be in some more, I've got rentals in a college town. Less people go to college. That's actually the most concerning factor recently for me, is just the lack of people going to colleges and wanting to waste money on something like that. I mean, if you're not getting an engineering degree, I see no reason to go to a 4-year school. But there's especially business. Don't go to school for business. Go spend 4 years and go open businesses and fail for 4 years, and you'll spend less money.
And learn 10
and learn way more.
Completely agree with you. No, I agree. Like I think, and we can throw a link to the Fred graph on this in the show notes. But that's one of the things that I always, I like to point out. I've seen others point out is that rents are sticky, right? They rarely go in reverse. And you mentioned 08. I think even like the graph, I'll get my hand going the right direction here. It was it's kind of steadily up into the right, and then in 08 it kind of flattened a little bit, and then it picked up again and it kept going. And I think there's going to have to be more than a government spending pullback to really cause rents to take some kind of like negative pull, right? Maybe we see some growth stopping, but then that starts running into other things of like, well, like true supply and demand. The population's still growing, and we don't have enough housing. So, like,
unless we deport everyone, which is another concern, right? And that goes back to maybe kind of just the underlying idea here is that I'm personally very bullish on what the next 4 to 8 years look like. I think there's a lot of good happening. This is one of those situations where everything is so incredibly destroyed. I mean, I get into fairly constant arguments. That email thread Dustin mentioned earlier was me forwarding something from my father, just arguing back and forth with me about how we should short Tesla, and how everything's getting cut too quickly. But we've got to break a bunch of shit, right? I mean, everything's broken. We've got to go in. We've got to cut. I'd love to see the whole government get cut, but cut as much as we can. If we could possibly balance the budget, that would be cool, right? And then from there, that's where I think we see asset prices and the real economy take off again, right? Is when you remove all the bloat. Yeah, it's painful for a little thing. We see the same stuff happening Argentina, right? With Malay. I mean, I remember talking to an Argentinian that was in Tahoe, and I might have mentioned this on the show before, but I was in Tahoe at a nice resort, and we were hanging out for a few days, and there was a s'mores booth. I'd never been to a hotel that had a s'mores booth before, and the girl working the s'mores counter was from Argentina. She was an H1 or I don't remember what they are, but she was on a student or a work visa here. And she was saying how excited she was that Malay was there. And I kind of remember having this brief conversation with her. I mean, it wasn't long. I was just getting some marshmallows, but that things are going to be hard for a few years, but if they can push through it and be okay with him doing all of the things he's doing, similar things I think we're seeing Trump and Elon do right now, and Vance, I think that will be good in the long run. So maybe back to the point of the falling stock market, I think this just is a symptom of fixing the system.
I agree. And I don't know that people want to make the argument about real estate being in a bubble, which I don't think is true at all. And I think even when they're talking about that, that's usually residential real estate, which I also...
That's definitely not in a bubble.
Yeah, I completely disagree with that. I mean, this, I think a lot of what's going on right now, whether or not there's true, let's call it asset price deflation, which I feel is something that's more lasting than just a temporary market sell-off. I don't know, because those two things are not the same, right? Like I think what we're seeing right now is a lot of it's the animal spirits, right? It's everything that I hate about the stock market and why I don't like investing there. I hate the volatility. Every now and then you have some event, something happens and everybody just freaks out and hits the sell button. And this again goes to like when everything sells off, like it's selling off not for rational reasons. It's selling off because the traders saw someone else selling off.
Well, and there was that same Morgan Stanley advisor I was talking to earlier. He had some concerns around liquidity leaving the system due to less U.S. support of other countries, right? So if we're not going to give military support to Germany, then Germany might need to start building up their military, and to do that, we've seen German defense contractors spike. Now, I don't follow this stuff super closely, so if that's a talking point and there's one stock that's gone up, right, who knows? But overall, I think that as long as I was talking to Dustin right before this. A lot of this goes back to, what was your plan, right? Was your plan to buy, are you 29 years old and you were holding these stocks until retirement and you were expecting dividends off of them? Then just wait, right? I mean, even if you were holding Tesla, you weren't holding Tesla for the dividend, right? You were expecting it to 10x.
I don't think Tesla paid a dividend.
I don't think they did. So, hold it for a 10x, right? Just keep waiting because it was a speculative play, unless your plan was to sell it if it cut in half, right? Going back to what was the initial plan, but these market crashes are near comical to me to watch everyone freak out momentarily.
And I don't even know if crash is the right term, right? Like I don't think we've hit correction territory yet. So like, which is 10% off a high. Obviously, there have been individual stocks that have had that, right? Tesla being a good example. And I think one of the things you and I were talking about earlier too is, okay, well, let's say you had, what was the example you gave? 25% of your, like a quarter of your net worth in Tesla stock. Okay, well, you've just seen now, 12.5% of it evaporate.
Yeah.
And that's, it's good when it's going up. It's really bad when it's going down. And I think that's one of the, there's so many different angles to take on this. One being position sizing, especially in something, if you can stomach that volatility, that's great. I've told investors that before. Like if you, as long as you're going into it knowing that can happen and you're okay with that, and that's not going to impact your life, that's fine. But very few people do that much planning or introspection as far as like aligning what they're investing in with their actual goals. And it's not that complicated. It's just you end up with, owning a quarter of your net worth is in Tesla because you thought, or you saw people talking about it on Twitter and were like, well, I guess I better load up on Tesla stock. And that's not the right way to invest, right? And so I think if you're coming at it from a wealth preservation standpoint, which I know, we've got an audience that's made up of, higher income earning folks. And a lot of times want to keep that wealth, right? And putting it into high volatility stocks is not the way to do that. Again, you have to take, we've done some, goal setting episodes before. I think it's and I've written on this too. It's just very important to know that how you're invested lines up with, your mindset, your worldview, your own personal investing goals, both short-term and long-term. And as long as that's okay, like if a short-term crash happens and you were heavily exposed to stocks and you went into it knowing that could happen, and that was like the plan all along, like, it doesn't matter, we're holding, then great. Mm-hmm. Then if you're like me and you hate volatility and you're like, I'm going to keep my exposure to that as small as possible, then when it happens, it's a non-event, right? Like it's like you were saying earlier, Adam, tenants are still paying rent, right? Like that, that really hasn't changed. And
really, in a lot of cases, the lower income type C and B class apartment buildings that we primarily buy are not people with large stock portfolios, right? Their job's still coming in, and honestly, I'd probably argue they're more blue collar than they are government jobs, so they're probably still pretty safe.
Yeah, and potentially have, depending on the reshoring of manufacturing to the U.S., might even have better, forward-looking job prospects than
can raise rent.
White collar. Yeah, exactly. And that was one other point that I wanted to make. Jason Hartman has talked a lot about, he has all this information rebutting why there's, could be a housing collapse. And he even talks about the impact of unemployment and how that, because people are like, oh, there's going to be unemployment and people aren't going to be able to pay the mortgages. And then there's going to be all these, defaults and houses for sale and all this stuff. And he's done a bunch of research to show that that's not going to happen. Like that makes logical sense as a narrative, but then when you start actually looking at the real world data, it's not a thing.
Match up. Unemployment insurance covers the mortgage payment.
Yeah, exactly. Like one of the things we learned through COVID was that people prioritize paying their rent. Everyone thought that like, oh my gosh, people they're losing jobs and people being laid off, they're just going to stop paying their rent. No, that was actually the one thing that they kept paying. And so I think that kind of proved, okay, in a very severe scenario, people still prioritize keeping a roof over their head. And we could potentially have, the existing government programs are there and are generally enough to provide the support that's needed and to at least keep the roof over their head. So it's a great, owning rental real estate is not as impacted when you have these events that are impacting the really liquid assets like stocks, right? Like it's just a completely different dynamic. Even if you have a job loss scenario, there's other things that are in place that keep the value of real estate up because the income stays there, right? Like you're not seeing a drop in rents.
And I think we probably can start to bring this to a close, but the last time I was really actively involved in the stock market, I used it primarily as a saving mechanism, right? I would take capital out of rents, however I earned money, W-2 job or whatever, I'd put it in the stock market, and then when there was time to buy a house, I would liquidate a set of the portfolio, right? And if it made sense at the time, I would just do the math. Even if the portfolio had taken a little bit of a hit, which it hadn't much, but if it had, then did it make sense to transition to real estate for whatever reason? And now I focus more on debt funds. I didn't know they existed before. Things like our private credit fund, where we're only has a 2-year lockup, and then after that it's 90 days. So we're able to pull money after we keep it in there for a while, and it's earning 10%. So that's not bad.
Yep. No, you're spot on. I agree. I mean, I think there's a lot of different dynamics to this, and we can sit here and forecast and think about what might happen, and some of that starts to get to my thesis about why forecasting and macros a waste of time. But I think there's a lot of reasons for real estate investors to not really be that concerned about, I mean, yes, there's going to be a lot in the news. You're going to hear a lot. There's going to be uncertainty. There's going to be an air of fear even among folks, right? Especially when you turn on the television and it's like, oh, the S&P was down 3% today. Like when you're bombarded by that, of course it starts to impact your psyche, but you kind of have to remember some of the underlying factors that support real estate and support real assets that don't support the stock market. And so if your portfolio is more geared towards those real assets, you end up insulated from it. I don't know. Any other thoughts?
That's all I got.
All right. Well, we'll get on out of here then. We'd love to hear from you if you've got thoughts on this. And obviously there's uncertainty. We don't know exactly how things are going to play out, but if you have thoughts or opinions on anything that we've shared here, we'd love to hear. Head to wealthindependencepod.com. We've got a contact form there you can submit. We'd love to hear it. I think eventually one day we may do a reader submission or a reader mailbag kind of episode. But with that, we'll go ahead and get out of here for this one, and we'll see you guys next time. Thanks for being here. And just remember, where freedom leads, real wealth follows. Thanks, y'all.
Thanks for joining us on Wealth Independence. This show is for informational purposes only and is not financial, investment, legal, or tax advice and does not constitute an offer to buy or sell securities. All investments carry risk, and investors should always conduct thorough due diligence and consult with qualified professionals before investing. Until next time, remember, freedom leads and real wealth follows.